Hi, everyone, and welcome back to EarnPark. My name is Zira, and I'll be your host for today as usual. So, over the past month, we've been running a customer survey and a series of in-depth user interviews. And one thing that kept coming up again and again, people are excited about the Park token, but many don't fully understand its utility. And that's completely fair. Tokenomics can be complex, and if utility isn't clear, it directly affects how people think about buying or holding the token. So today we want to change that. We'll walk you through Park's tokenomics and more importantly, its real utility, what you can actually do with the token, why it matters, and how it connects to the future of EarnPark. So to guide us through the topic, I'm joined by Eugene Netso, co-founder and managing partner at EarnPark. Hi, Eugene. Thank you for being here.
Hi Vera, thanks for inviting me. I'm glad we are doing this because clarity is the key. Park is more than a number on the chart. It's designed as a working tool inside our ecosystem. So let's unpack it.
Okay, let's start simple. Imagine I'm new to EarnPark. I already know that I can invest in strategies with USDT, Bitcoin, Ethereum, and earn 50% APY, lock in my Park allocation. But why would I even need to buy Park?
Good question. Park isn't just a speculative asset. It's the heart of EarnPark ecosystem. The reason Park exists is to link everything together: strategies, users, community, and long-term growth. Think of it like a multi-purpose membership pass. When you hold Park, you are not just an investor in strategies. You are part of the platform's economy. The token gives you benefits that go beyond just yield. You can boost your returns through liquidity mining and staking. You get access to premium strategies that otherwise might be closed. You can participate in Park Launch, which rewards people for contributing to growth even outside of investments. Park will also unlock discounts on platform fees, which will also boost the net APR by letting users keep more of the strategy earnings. And as the ecosystem matures, Park will become a governance tool. So the more the platform grows, the more ways you'll have to use the token. It's a bridge between being just a customer and being a stakeholder in EarnPark's future. And to support the token, we plan to buy back Park from the market with 10% of our revenue once we hit breakeven, which we currently project for 2027. So the more users we have and the more liquidity we manage, the more tokens we take off the market. We're also looking at other ways to strengthen Park's utility. Since we act as liquidity providers on DEXs, we've spent the past 2 years figuring out how to manage impairment loss. We think we have found a solution, a synthetic protocol that lets you go long on pool fees and short impairment loss. The first version should be live by the end of the year. Our idea is to make this product available to the market and direct part of its fees back into Park. It's just one example of how we see the token integrating into the new products as the ecosystem grows.
Okay, so it's really about alignment. So holding Park makes you a part of the upside, not just a passive user.
Exactly, it's about making sure value flows back to the people who build this ecosystem with us.
Okay, so a quick practical question we keep getting. How much Park should someone actually hold to unlock most of the benefits?
We modeled this across today's utilities. A simple rule of thumb: holding about 10-12% of your EarnPark portfolio in Park tends to maximize the benefits for a typical risk profile. It's not a hard rule. Your number can be higher or lower depending on risk tolerance and time horizon. And none of this is financial advice, of course, but in our tests, the range consistently unlock the best mix of access and rewards without over concentrating the portfolio.
Okay, thank you so much. I understand it now. So now let's get into the tokenomics. 1 billion tokens in total. So how do you make sure distribution is fair and sustainable?
We built the model with long-term sustainability in mind. Here's the breakdown: 29% goes to investors. The goal is to use the raised funds to grow the product and attract more users. That's across seed rounds and multiple public tiers. Unlocks are structured. For example, the first three tiers have 12.5% unlocked upfront, with the rest vesting over 9 months. Later rounds unlock faster, but overall the flow is controlled. Assuming the final tier is priced at $20 million FDV with 2 cents per token. The market cap at the first unlock would be roughly $2 million. 40% is allocated to the community. This is the largest share, marketing, liquidity incentives, and staking rewards. It's meant to drive growth and reward participation, not just speculation. The goal here is similar to the investor allocation, to motivate the community to grow activity and liquidity on the platform. That activity then translates into our operational revenue, which we can reinvest into future product growth and development. 22% goes to core contributors. That includes the team and advisors with strict lockups, in some cases 48 months. This ensures the team can just exit well locked in for the long run with the longest lockup of all allocation. 6% for liquidity pools and market making unlocked from day one to guarantee trading stability. 3% for partnerships with a 6 months lockup and 12 months vesting to support long-term collaboration with key partners and regulators.
Okay, so a big part of the token supply is allocated to the community. How do you plan to distribute it effectively?
Because our growth model depends on users, so we want most of the value to go to the people who actually build EarnPark with us. One of the core mechanics for this allocation is token mining. It rewards deposits and engagement. If we see that it's not driving the right results, so we'll stay flexible and redirect those tokens to other mechanics or even to funds if we need them for growth. The idea isn't just to hand out tokens, but to use them where they create the most impact and keep the ecosystem healthy, and everyone wants it.
Okay, so the vesting schedule is what makes this sustainable, correct?
Right, Western ensures there's no sudden oversupply. Team tokens, for instance, unlock slowly over 4 years. This creates alignment and keeps the market healthy.
Okay, thank you so much. So before we move on to utility, I want to stop at something unique with EarnPark do during the token sale. The token sale strategies. Can you please explain it to us in detail?
Right, this is a big innovation for us. Normally, token sales follow the same model. You have a first come, first serve round, and people are refreshing page trying to get in before the allocation fills. It's stressful, and most users end up missing out, which is exactly what happened in tier one of the sale, which we hosted on EarnPark as well. It's also out in under 1 minute, and a lot of people didn't get the allocation. We wanted to solve the problem, and not just that, but to solve it for people who already know the platform and use it, as well as for those who are just learning how to use it. So we introduced Token Sale DeFi strategies. Here's how they work. Users can deposit USDT, Bitcoin, or Ethereum into a special strategy before the sale. While their funds were locked, they are earning yield, 50% API. Then on the date of the token sale, September 24, for now, the entire balance, deposits plus the rewards in the strategy, will be automatically converted into Park tokens at the tier free price. This gives users guaranteed participation without the stress, and at the same time, they don't waste weeks just watching for the sale. Their money is actually working for them.
Okay, so essentially it's reserving your allocation in advance while still making your assets productive. That's very different from a typical launchpad sale.
Exactly, it's a win-win. Users secure the spot, we attract committed liquidity, and the community gets a smoother path into the token sale. And we see this as a part of Park's broader utility. We are not only giving you tokens, we are building financial tools around them that make participation smarter and fairer.
Okay, thank you so much. So let's move to utility, the most understood part here. So liquidity mining is probably the first thing people will experience. And how does it actually work?
When you deposit into EarnPark strategies, you already earn API in your base asset, USDT, Bitcoin, Ethereum. Liquidity mining adds an extra layer. You also earn Park tokens on top of that, and it's not random. Rewards depend on some factors: the type of strategy, the current liquidity zone, the deposit amount, and how long you stay invested. So, for example, if you deposit into a strategy and keep your funds for 6 months instead of just one, your Park rewards multiply. If you join early, when the platform is in the first liquidity zones, you get higher multipliers because we want to reward early supporters. This creates This creates a system where the people who commit more in size, duration, or timing get more out of it. It's fair, it's transparent, and it ties token distribution directly to actual usage.
Okay, so liquidity mining isn't just a giveaway, it's carefully structured to reward behavior that actually builds and benefits the whole ecosystem.
Exactly, it's designed to grow the platform sustainably, not inflate the token artificially. We're actively testing and refining this mechanism. So far, everyone who participated in the beta test, meaningful clients with deposits as of July 2025, have earned rewards. Right now, we are running an alpha test, and in about 2 months, we'll launch mining version 2. We'll keep monitoring how it impacts deposits. If it doesn't move the needle, we'll redirect token incentives into other mechanics. Our goal isn't to just give away tokens, but to grow and keep tokenomics sustainable.
Okay, thank you for explaining that to us. Now, let's talk about the Park Lounge. What's the vision behind it?
Park Launch is about inclusivity. Not everyone has thousands to invest, but everyone can contribute to growth. In Park Launch, users complete tasks, join campaigns, test features, share content, and earn Park points. Those points will later convert into a share of $1 million Park airdrop. This means even if you are new or just exploring, you can start building a position in Park tokens.
Okay, so in practice, Park Lounge is like a long-term loyalty program, but one that actually pays out in tokens with real utility.
Exactly, it's about turning engagement into ownership.
Okay, next point of utility for Park is staking. Now, every token project seems to have staking, so why does it matter for Park?
For us, staking isn't just about locking tokens for yield. It does three things. First, it boosts your returns. If you are invested in strategies and you stake Park, your API goes up. The longer you lock, the higher the multiplier. Second, it unlocks premium products. Some strategies with higher yield or tighter capacity will be available to stakers. And third, it allows participation even if you are not investing in base assets. You can also stake Park and still earn. So whether you're a big investor or just holding tokens, staking makes sure you benefit.
Okay, thank you so much. Now, before we wrap up, can you please share how the team decides which features to build and what's next for EarnPark, like high demand strategies, AI agents, and so on?
Sure, we try to stay flexible. We actively talk to our users, collect feedback, and build hypotheses based on what we hear. Then we evaluate, prioritize, and focus on doing the right things first. That's why we can't promise every possible utility from day one. But here's what we are working on right now. It's high demand strategies with limited capacity. We are managing tens of millions now, but as we scale, not every user will be able to enter every strategy. Park will act as your ticket. Stakers and holders will get priority access. AI agents are something we're very excited about. They are AI-powered tools designed for park holders. Imagine being able to generate a personalized portfolio that adapts to your risk profile, or run analytics that detected hidden market trends, or even describe a strategy in plain English, and the bot turns it into executable code. This democratizes algorithmic trading. It gives retail investment tools that previously only hedge funds had, and park holders are the ones who will get that access. And I've already mentioned the buyback program and the liquidity hedging protocol. Both are designed to tie Park directly to the platform's growth. Another direction we're exploring is even more practical things like EarnPark Link bank cards that give you simple direct access to your funds. It's all about making Park not just a token you hold, but something you can actually use in your everyday financial life.
Okay, so we're not just talking about a token with yield features, we are talking about unlocking a whole new layer of intelligence and access to the community.
Exactly, it's about building real value on top of the token, not just hype.
All right, let's wrap this up. Here's what we've learned today. Park isn't just another token, it's the backbone of the EarnPark ecosystem, a way to earn more through liquidity mining and staking, a way to participate through Park Lounge, and a way to unlock exclusive opportunities like premium strategies and AI-driven tools. So for a community, this means Park is more than an investment. It's your way to be directly involved in the platform's growth. The token sale is coming soon, and if you want guaranteed access, join today via Token Sale DeFi strategies, earn 50% APY in the meantime. And if you want to join the live sale the old way, make sure to join the waitlist today. You'll find all the details in the description below, so thanks everyone for watching. We'll see you in the next video.